Welcome to the weekly market recap with Sampath Securities. Let's take a look at some of the latest developments in the Sri Lankan economy and financial markets. Sri Lanka's external account remained in surplus for the fourth consecutive month in February. However, underlying trends point to growing imbalances in the economy. According to the report, the current account recorded a surplus of $117.2 million for the month. This brings the cumulative surplus for the first 2 months of 2026 to $487 million. Despite this, the merchandise trade deficit widened sharply to $776.1 million in February. Imports increased by over 25% year-on-year, while export growth remained marginal at just 0.5%. The rise in imports was largely driven by increased vehicle imports, which reached $194 million during the month. This reflects a recovery in domestic demand, but also raises concerns about the sustainability of external balances if consumption-driven imports continue. At the same time, the terms of trade deteriorated, with export prices weakening faster than import prices. This trend is seen as a sign of decline in external competitiveness. The services sector also showed signs of pressure. Net inflows declined by 16.7% compared to the previous year. This was mainly due to lower tourism earnings and increased outbound travel spending. Although tourist arrivals continued to rise, earnings fell by 4.2% to $352 million, indicating a decline in spending per visitor. In contrast, worker remittances remained the strongest contributor to the external account. Inflows increased by 33% year-on-year to $729 million in February. Cumulative remittances for the first 2 months of the year rose by 32%. Financial flows reflected mixed investor sentiment. Government securities recorded a net foreign inflow of $53 million. Gross official reserves increased to $7.3 billion by the end of February. This was supported by central bank purchases despite ongoing external debt servicing. However, global pressures are beginning to have an impact. The Sri Lankan rupee has depreciated by 1.6% against the US dollar year-to-date by the end of March, following rising geopolitical tensions in the Middle East. Sri Lanka's labour market showed mixed trends in the fourth quarter of 2025, with lower unemployment recorded despite a decline in labour force participation. According to the Department of Census and Statistics, the labour force participation rate eased to 48.8%, down from 49.9% in the previous quarter. However, total employment increased during the period, reaching over 8.4 million. This rise in employment contributed to a decline in the unemployment rate to 3.8% from 4.3% in the third quarter. On a year-on-year basis, labour force participation showed a slight improvement compared to 47.7% recorded in the same quarter of the previous year. Gender-wise, male participation remains significantly higher at 68.1%, while female participation stood at 32.3%. Although this reflects a decline from the previous quarter, it remains higher than levels recorded a year earlier. Unemployment rates also improved across both groups. Male unemployment declined to 2.7%, while female unemployment fell to 5.7%. In terms of overall employment, more than 5.5 million males and nearly 3 million females were employed during the quarter. Meanwhile, economic growth moderated during the period. The economy expanded by 4.8% in the fourth quarter, down from 5.4% in the previous quarter. This contributed to an overall growth rate of 5% for 2025. The period was also impacted by Cyclone Ditwa, which affected several districts with high concentrations of agricultural and plantation workers. According to an assessment by International Labour Organization, up to 374,000 workers were located in areas directly affected by floods and landslides. The report indicated potential monthly income losses of around $48 million if employment disruptions occurred. The assessment also noted that a significant portion of agricultural land was impacted. including up to 23% of rice cultivation areas, while tea output losses could reach as high as 35%. Sector-wise, the services sector remained the largest employer, accounting for over 50% of total employment. Industry contributed just over 26%, while agriculture accounted for about 23%. Youth unemployment also showed improvement, declining to 13.1% from 14.9% in the previous quarter. However, high rates were observed among young age groups, particularly those between 20 and 24 years. Unemployment among individuals with advanced level education and above also declined, indicating broader improvements across the labor market. Sri Lanka's construction sector is showing signs of caution as rising global tensions linked to the war in Iran begin to impact cost and supply chains. The sector is already facing higher material prices, while concerns are growing over possible supply disruptions. This follows Iran's move to block ship traffic through the Strait of Hormuz, a key global shipping route. The industry has faced multiple challenges over the past decade. These include project delays following a change in government, the Easter attack-related shock, and pandemic-related disruptions. In addition, shortages of foreign currency and high inflation created prolonged difficulties before conditions began improving around 2024. However, the latest global developments have once again pushed up fuel and material costs, placing renewed pressure on the sector. Despite these challenges, construction activity has continued to expand. The Purchasing Managers Index or PMI recorded 70.3 points in February, slightly lower than 75.0 in January, indicating a slower but continued expansion. This growth has been supported by a steady pipeline of construction projects and generally favorable weather conditions. According to the PMI report, new orders continue to increase, with firms reporting a wider availability of projects. In response, companies expanded their workforce as reflected in the rise in employment levels. At the same time, the supply delivery times have lengthened. This is due to sustained demand and delays in imports, partly linked to the Chinese New Year period. Looking ahead, the outlook for the sector appears more uncertain. Rising costs could slow down activity, particularly if interest rates increase in response to higher inflation. While there has been no clear signal of a policy rate hike, market indicators suggest tightening financial conditions. Treasury Bill yields have risen for 2 consecutive weeks, and prime lending rates have also increased in recent weeks. This suggests that borrowing costs may continue to edge higher, adding further pressure on the construction industry. The Central Bank of Sri Lanka indicates that market interest rates are expected to decline further in the coming months, while private sector credit growth remains strong. Speaking at the Monetary Policy Review, Economic Research Director stated that market interest rates have already shown a broad downward trend. He noted that despite a temporary increase towards the end of 2025, the overall direction remains downward and this easing is expected to continue. Meanwhile, private sector credit continues to expand. Year-on-year growth in January stood at 26.3%. Total expansion in 2025 reached around 2 trillion rupees, significantly higher than the previous year. However, new borrowing showed a slowdown. In January, fresh private sector borrowing declined to 82.6 billion rupees, marking the lowest level in 11 months. This follows a gradual drop from November 2025, when borrowing peaked at 263 billion rupees. Despite the slowdown in new lending, the total outstanding private sector debt stock rose to 10.3 trillion rupees by January, maintaining strong annual growth. According to the latest credit supply survey by the central bank, lending conditions are expected to improve. Banks have indicated increased willingness to lend across retail, corporate and SME sectors. This outlook is supported by expectations of stronger business activity, improved liquidity and overall economic stability. On inflation, the central bank expects it to reach around 2% by the end of March 2026. This projection already factors in high fuel prices and related impacts. Sri Lanka's export sector recorded steady growth in February, with total earnings exceeding $1.4 billion. According to the Sri Lanka Export Development Board, this reflects a year-on-year increase of 4.22%. Merchandise exports showed modest growth, rising by 1.32% to over $1.06 billion. Meanwhile, services exports performed strongly, increasing by 14.68% to nearly $335 million. However, on a month-on-month basis, total exports declined by 9.2% compared to January. Looking at the broader trend, total exports for the first 2 months of 2026 increased by 7.56% to nearly $2.9 billion. Merchandise exports rose by 5.22%, while services exports recorded a stronger growth of nearly 16%. Services exports were supported by sectors such as ICT, business process management, construction, financial services, and transport and logistics. Sector-wise, apparel and textiles remain the largest contributor to exports. However, earnings from the sector declined by over 6% during the first 2 months, mainly due to weaker demand from key markets such as the United States and the European Union. In contrast, industrial exports showed stronger growth. Earnings from electrical and electronic components surged by over 50%, driven by increased demand for wires, cables, and electronic equipment. Agricultural exports also recorded notable gains. Tea exports increased slightly, while coconut-based exports rose sharply by nearly 28%, supported by stronger demand for products such as coconut oil, desiccated coconut, and coconut milk. Food and beverage exports grew by over 30%, while seafood exports also expanded significantly, driven by strong performance in both fresh and frozen fish categories. On the services front, ICT and business process management exports increased by over 37%, while transport and logistics also recorded steady growth. The positive performance builds on the momentum seen in 2025, when total export earnings reached over $17.2 billion. For 2026, Sri Lanka has set an ambitious export target of $20 billion with expectations of double-digit growth. In terms of markets, several countries including the United Arab Emirates, China, Australia, and Mexico recorded positive growth. Let's take a look at this week's Treasury Bill auction results. With the recent Treasury Bill auction, the 91-day T-bill rate stands at 7.80%, up by 16 basis points. The 182-day T-bill rate stands at 8.09%, up by 14 basis points. And the 1-year T-bill rate stands at 8.41%, up by 9 basis points compared to the previous week. Thank you for watching. We'll be back next week.